Hello everyone, welcome to the monthly market outlook for the month of February 2015. We will start with the Thai stock market outlook and then stock pick for the month. In our views, the Thai stock markets for the month of February will still have very high volatilities, but the room for the upside will be capped at around 1630 points, as it seems the absence of fresh trading catalysts will loom for the upsides appear quite limited. Despite we think the positive factors for the market would be focused on the possible foreign fund inflow due to the start of the Euro QE in March that would spur Thai stock market. But however, we think with the current level of Thai stock market valuation that trade above 15 times of multiple PE would quite high and seem trading above the regional average. That would be maybe put Thai stock market in an awkward position to leave the benefits of the foreign fund inflow into Asia. As I will show you the related graph about the foreign fund flow. For this page show the total flow of foreign fund flow into 5 stock market in Southeast and East Asia ex Japan, representing in the red dot line, while the dark blue line show the sell index movement. You can see that the fund flow into East and Southeast Asia's equity would be a catalyst for stock market rally. However, for Thai stock market, especially in 2014, you can see that it seems we get the benefit, not get the fully benefits from the flow. As you can see that our set index had not rose as much as it should be. It has not geared up with the same slope of the flow into Southeast Asia's market. I think in 2014 we're still facing with the political problem, especially in the early of the year. So the foreigner maybe hold their decisions to see our political developments, and that will cause that we see the foreign fund flow out from equities market during 2013 to 2014 on our domestic political chaos. However, with the factor of politics and the foreigner that sell Thai stock market during the past 2 years, that caused our percentage of foreign holding to total market cap slow down to below its average in 4 years. As you can see from the chart in the lower right hand side, the average during the 4 years, the last 4 years, is around 34% of foreign holdings to total market cap. However, at the current level, is around 32% only. That means the foreigner hold our Thai equities quite low than ever. So that would be the reason that they will not consider to sell as a lot as before and may gain some inflow. However, would be still in the limited range, as if we can see from if you can see the stretch PE multiple dense Thai stock market attractiveness as shown in the graph, that before US financial crisis in 2007, Thai stock market was traded around 10 times of PE, and then lower to 7 times during the crisis, especially in 2008. However, after that, several countries trying to inject a lot of money in terms of QE plan to the system. So that's throw benefit to a lot of market, especially in the equity market, including Thailand. So our PE had been lifted from 7 times in 2008 to 13 times during the 4 to 5 years, and will peak to 15 times of PE last year. And at the PE of Thai stock market at around 15 times, that seemed quite high and stay above the original average of around 14 times. That means our Thai stock market seems not so cheap anymore. So that would be one of the factors that caused the foreigners to consider to jump in quite a lot into Thai stock market. And another significant reason is the large swing in the global oil price, which indicate the directions of the energy shares that accounting for more than 15% of Thai stock market total market cap. That could leave the market vulnerable to elevated level of volatilities along the ways. So in a big picture sense, the Thai stock market could be in for a choppy range bound actions in February, which the upside room cap at 1630 point. The trading range for the set index is expected to be between 1550 to 1630 points in the month of February. So our recommendations is to sell on high and buy on low. If the Thai stock market rally to around its resistance level around 1630 or the peak at 1650, we recommend to sell the rallies. However, for the cut loss points, we set it to 1550 points. If the set index fail to hold above that level, you may have to cut loss because its breakdown below this level could clear the way for the further downside to retest 1500 level again. About the investment theme for the month, we still focus on the play on the government policy towards the infrastructure investment, digital economy, and also nano finance would be our key investment themes in the month of February. And here's our picks on the detail of each stock.
We start with the first one, Ichiban, for the year 2014. We expect the net profit to grow around 34% year-on-year, with a net profit of 1,184 million baht. The key drivers boost the key driver for the strong growth is because of the capacity of 1 million plastic bottles per annum during the fourth quarter last year. For this year, we expect Ichiban to earn additional revenue from the following three new sources. The first one is remarketing of the recently acquired Baile in February 2015. The second one is the start of Ichi brand of green tea and beverage products in Indonesia in April this year. And the third one, the production of the plastic bottle for other beverage makers taking advantage of new capacity additions. We expect the share price to move up to 24 baht per share. That's why we recommend buying on this share. The second one is KTB Krung Thai Bank. Krung Thai Bank posts a solid growth, loan growth of up to 10.9% year-on-year last year. Riding on government investment and growth momentum also looks set to continue in this year. The bank has set a loan growth target of only 6 to 7% of this year, but we see scope for the bank's loan growth to exceed the target. At the year-end 2014, the bank's LLR to NPL ratio stood at 132%, which is above the industry average of 124%, lowering the risk of more huge extra loan loss provisions. We forecast the company to pay dividend 0.88 per share for the 2014 and expect 1 baht per share for this year, which implying a dividend yield of 3.9% for last year and 4.4% this year. The fair price is 28 per share. We recommend buy for the stock. The last one is Thailand. Last year, the company has launched Thailand 6 and Thailand 7 into the orbit. The Thailand 7 has just launched on September 7, 2014, and we expect to start recognize the revenue on this quarter. The company also plans to launch another satellite, Thailand 8, which is a medium-sized satellite. The investment is around $180 million. Thailand plans to launch the Thailand 8 into the orbit on the first half of next year. For the growth of this year, we see the high growth from the full year revenue contribution from Thailand 6 and Thailand 7, and also the performance of mobile phone service in route, which is a quite strong growth and have a strong margins as well. We expect the company to put the net profit growth of around 35.42% year-on-year, with a net profit of 2,179 million. We rate buy on the share with a fair value of 49.5 baht per share.